Sources telling BQ Prime that an internal group within the Reserve Bank of India is looking at ways to curb the impact of big tech firms on India's banking and financial system. What sources are telling us is that currently an internal group is deliberating ways in which such measures can be taken, which will limit the impact of big techs. Remember that big techs have been a problem for the RBI for a very long time. In private as well as public gatherings, the RBI has been expressing that big tech firms pose an unknown risk towards the Indian financial system, simply because these are large technology firms with complex corporate structures, and therefore it is difficult for a regulator or other regulators within India to have effective oversight over these companies. Now remember that these deliberations have not yet moved in the direction of regulations for the big tech firms which are active in India, but if in case it does result in any kind of regulation, it could come in the form of tougher data localization norms or higher regulatory burden on bringing on customers on board for these big tech firms. What the RBI is not looking to do is ban these firms within the Indian banking and financial system, because typically entity-based regulations have unintended consequences. So the RBI is trying to avoid an outright ban, but is looking to impose higher regulatory burden on these companies. In case these norms do come up, and if the RBI does impose any kind of tough regulations on these companies, then that may see a seismic shift within the Indian banking and financial system, because currently, if you remember, within UPI, which is one of the most popular payment mechanisms in the country, Google Pay is the second largest player in the market. So in case there are tougher norms for companies like that, then that may result in smaller fintechs getting more room in building their business and growing into sizable shape and form within the financial system.